This is Alan Bush with the Daily Financial Forecast for Thursday, September 15th. Starting out with the stock index futures, we are putting in some very good gains across the board in the indices, even though we did have the retail sales numbers coming in a bit on the weak side. In fact, retail sales coming in down 0.3% against the guess of down 0.1%. So with futures ignoring some bearish news, it should be viewed as a sign of strength. Also, it's possible that traders looking at the retail sales number thinking that this could be a reason for the Fed to hold off on raising interest rates when they next meet next Wednesday. Longer term, we do feel that the main trend is higher for the indices, and I do think that we will see some new highs for the move later this year. So even if the Fed does raise rates, which is very unlikely at the upcoming meeting, a rate increase is still not enough to derail this bull market in stock index futures. Now, moving over to the currencies, the dollar index trading a little bit better, also ignoring the weak retail sales report. Could be that traders are interested in covering shorts ahead of the Fed meeting next week, just on the off chance that the Fed could possibly raise rates, although the probability of a rate increase at that upcoming meeting is only about 12%. Yesterday it was at 15%. But in any event, I think shorts are just looking for a little protection, looking to even up ahead of that meeting. Also, we are seeing the pound under a little pressure this morning. This after the Bank of England at their policy meeting indicating that while they did not change policies at today's meeting, there's a possibility that they could lower rates at following meetings this year. Also, we are seeing the yen continuing to decline on ideas that the Bank of Japan at their policy meeting next week could add more stimulus in the form of negative interest rates, which are currently negative and could possibly become even more negative. Also, we are seeing the Australian dollar relatively firm after the unemployment rate in Australia coming in at its lowest level since September of 2013. Now, moving over to the interest rate futures markets, the long end of the curve, the 30-year bonds, substantially weaker at a time when you would think that they would hold up relatively well. As we mentioned earlier, the retail sales report, a very weak number, and yet this bullish news, at least bullish for bonds, was totally ignored. So that is a sign that we'll probably see continued pressure over the near term. And I think in advance of the Fed meeting, with their policy meeting concluding on Wednesday, in fact, it's a two-day meeting, look for the treasuries at the long end to continue to weaken. But we could put in, I think, a near-term low just in advance of that Fed meeting next week. So between now and then, look for continued weakness in the treasury bonds. Also in the gold and silver, the fears that the Fed could raise rates at the meeting next week, I think putting some pressure on gold and silver. Once that meeting is out of the way, I think we can see the bull market resume for the precious metals. So between now and next Wednesday, sideways possibly a little lower for the precious metals. After the meeting, expect the bull market to resume for the precious metals. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.